Welcome back. You're watching Business Today here on KTN News, and would now like to take a look at some of the business trends of 2016. Like we all know, like I mentioned, the three major areas that actually did create or increase revenue generation for the country were agribusiness, ICT, as well as real estate. But would also like to focus on the other trends of 2016 and just how we have performed as a country economically. And joining us is the investment manager for Site on Investments, joining us from our city center studio. But before that, let's just take a reminder of our Twitter poll question. In case you are doing last-minute Christmas shopping and travel, tell us how that is going. How is the last-minute Christmas shopping and travel going? Tell us about it. Use the hashtag Business Today, and you can also use at KTN News or my Twitter handle at JoyDurinBira, and we'll be able to sample some of your views. In fact, let me just take about two of them before we can cross over to Maurice Odor. Silas is saying, January will take care of itself. Impulse buying is my thing. I'm feeling philanthropic this holiday season. And Samson Kazungu is saying, shopping is so tiresome. People are crowded in shopping centers. Shopping is so tiresome and very expensive. Some of your views, but let us know how that is going for you, wherever it is that you're at. We're now joined by Maurice Odor, investment manager for Site on Investments. Good afternoon, Maurice. Thank you for joining us, despite the fact that you should be resting around this time. Christmas is here. I guess it's inevitable. But then looking at the country economically, doctors' strike, and so many other economic hardships. There was a recent corruption survey that showed that 3 out of 4 Kenyans are aware of the corruption vice. But then again, looking at the country in 2016, what would be your assessment?
I would describe 2016 for the Kenyan economy as a year that was caused by a lot of changes, so many things.
Yeah.
Especially if you look at right from the banking sector, there are a lot of changes that happened. Mm-hmm. Some positive, some also not that positive. You saw the closure of a number of banks again. Both issues surrounding corporate governance. Mm-hmm. We look at again back to investment environment in a security exchange have been characterized by mixed performance. Look at the shilling, relatively stable, but now toward the end of the year coming under pressure.
Right.
Inflation within the government limit, but there are a lot of concerns, especially if you look at the level of strikes and the strike that we are going to see, which again confirms the economic hardship and again the increase in the cost of living. So 2016, I can say, was a mixed bag for the Kenyan economy because if you look at economic performance, again, we are looking at about 6%, which is again very, very good and again one of the highest growth we've seen over the last 5 years, but still a lot more remains to be done.
All right, so let's take a look at the cost of living in the country today. Housing, the beginning of the year, we had seen the prices had surged, and then mid-year, we saw less demand for housing. And then towards the end of the year again, we still see the trend going up. What would you say of the demand for housing and real estate in the country?
If you look at the demand for housing and real estate in the country, this is a sector that now continues to grow again and continues to make good contribution to the growth of the economy. We are looking at the GDP contribution from this sector. If you put real estate and construction together, it's about 13-14%. And if you look at the number of Kenyans who can afford mortgages, there are very few. And again, access to mortgage and access to cheaper financing is also remains key. And again, we've already seen the levels of how banks are operating in terms of the level and performing loan, which again, majority of that has been attributed to performance in real estate, again remains a concern. So going forward, what we are likely to see that will shape the performance and the accessibility of good quality housing, and again, accessibility of financing for buying real estate products remains now how the players involved in this sector will come up with innovative products that now will give Kenyans access to quality housing, and again with the flexible payment plan. That's now the only thing that now will distinguish Kenya, and again will make that real estate investment remains accessible, and again housing becomes affordable if you are to achieve what is enshrined in Vision 2030, the social pillar, which means access to quality housing standards.
Right, and about the shilling, this year we have seen, I think, the Kenya shilling at its strongest, considering the kind of year we had in 2015 and 2014 as well. I think we saw the Kenya shilling at its weakest for the years before 2016. But then do you think that maybe in 2017 we are going to see the shilling weakening as a result of the US Fed rates hike by 25 basis points?
I think if you look at the happenings in the global economic environment, especially for the year 2016, we saw a number of populist moves going on, which again had negative impacts on emerging market economies and frontier markets, Kenya being one of them. We are now moving to a level now where the US economy is strong and again growing faster than expectation, which again now is already now on a move on increasing the interest rates. And if you look at again, according to the forecast, the dot plot is showing that 2017, we are looking at about between 2 and 3 rate hikes, which again now will reflect on the Kenyan economy. Given the levels of dollar-denominated debt that we have, shilling is likely to be under pressure going forward as again foreign investors now shift from emerging markets, looking for more safe investment in more developed market. Dollar is going to be a currency that is going to be in demand going forward, and especially in the year 2017.
All right, and let's also look at, the listed companies. I think the Nairobi Securities Exchange made quite some significant losses this year. They were actually putting the figures at about 50 billion. That's too huge a number, but then again, a number of companies this year have not given bonuses to their employees because of the poor performance of the companies when it comes to their earnings. But do you think that this trend is going to go on even in 2017?
I think if you look at the operating environment for 2016 compared to 2015, 2016 was more favorable, more better, and again conducive for earnings growth. But if you look at now the specific sectors for Nairobi Securities Exchange, we look at sectors like banking. Again, they have been recording very good growth. As at Q3, banking reported EPS growth of 15.1%, which is more than double what they did in 2015. But now going forward, we are likely to see again banking sector struggling in terms of profit growth. 2017 is going to be characterized by a lot of volatility in terms of earnings growth for banks. We are looking at a year that is now going to be full interest rate cap environment, where now the net interest income is going to be under pressure. And this one is likely to affect, even to spill over in terms of affecting other sectors, because access to credit from banks is going to be extremely difficult given the new pricing mechanism that will affect even the performance of other sectors. But of good news, if you look at 2016, there are less companies that were issued profit warnings. So far, we are talking about 3 compared to 17 that we recorded that issued in 2015, which again means that confirmed that 2016 has been better compared to 2017. But if you look at the performance of the exchange alone, has been mixed. In fact, right now we are in the negative territory, and part of this has been attributed to low demand in terms of foreign participation in the local market, where now the happening in the global economic environment resulting into increase in risk for emerging markets. Foreign investors have now been shifting to more safe investment destinations, and now we've seen a lot of sell-offs in emerging market stock exchanges.
Talking about low foreign performance or participation at the NSC, considering next year is an election year, do you think this is likely to happen again?
If you look at the trends and how stock market usually operates in an electioneering year, it has always been positive. But I think where we are headed in the year 2017, we are headed in an electioneering year that again has been characterized by a number of issues. If you look at now, we are moving into an election year with again a number of, especially banks, given that they constitute almost 40% of the market. We don't expect better performance from banks in the year 2017. And again, we are moving to an election where again foreign investors now attention is shifting to other markets, more developed. And if you look at all these factors put together, the indicator that emerging market stock exchange will not record good performance, given there is increased risk profile level for these markets. And again, especially given now Kenya, if we take that and again put with the electioneering season, we are likely again to witness this small performance in Nairobi Securities Exchange in 2017.
All right, so we have seen investment by the government in huge capex projects like the Standard Gauge Railway and many other projects, road projects as well. And some critics say the government is being extravagant, but don't you think that this could also be one way of looking at it in a sense of the government taking care of the economic future of the country?
It's true. If you look at this expansive capital project that the government is carrying out, there are things that we need, and they are going to be essential for the economy, and they are going to result into economic growth as a result of increase in economic activities. But if you look at how we've carried them out, it has been we've carried them out all at once, and they are very expensive projects. So the fact that the element, the bit where people are saying that now the government is being extravagant is in terms of how they are carrying out these projects. These are projects that we can carry out in bits, so that we, as a country, we live within our means. We fund, we take debt the level that we can afford, we can manage, so that again we don't complicate the economics for the future generation. So these are things that will result into economic growth, economic dividend from this infrastructure project, things like Standard Railway. But now we need to work around them in a manner that we don't result into economic shocks.
All right, and so would you say you would encourage the same trend? Because we have seen the government as well considering bonds like the Sukuk, which is the Islamic borrowing bond. But then again, just because of the fact that it is much cheaper, but they're also considering increasing domestic borrowing. So do you think that this is a little bit on the extravagant side?
If you look at different instruments for borrowing that the government can utilize, I think domestic borrowing is already at the level that now we should not even talk about it. Because if you look at the level that the government borrow locally is very high, and again that now resulting into slowdown in private sector credit growth. And look at, if you interfere with the performance of the private sector, effectively the economy will not do very well, and we are likely to see a lot of layoffs that we're already seeing now with the banks. If you look at that one going forward, government need to come up with more innovative ways, more efficient and more cheaper ways of raising funds. One of the ways that have always been talked about is about the Sukuk bond. If you look at how the Sukuk bond operates, is one of the instruments that is better, can be better utilized for funding infrastructure projects and also for project financing. If you look at, again, Kenya as an economy, thing that you can take advantage of, you can issue like even a diaspora bond targeting Kenyans who are in diaspora, that again they can contribute to the development of an economy locally. So there are a lot of more innovative and more efficient ways of raising funds that we can use in an economy. But at the end of the day, the main question is, the main issue is that we should do things that are within our level to manage, and again that make sure that the economy remains sustainable for long term and also going forward.
And finally, let's quickly talk about the interest rates. You know, this year was a different year for the banking sector. You know, we saw banks being placed under receivership. And still the same year, we are seeing the government coming in, or the president coming in as well, to cap interest rates for commercial banks, which has actually capped the lending rates at 14%. And this, in a way, could have affected their earnings. But do you think that 2017 is going to be a better year for the banking sector?
If you look at what happened in the banking environment, in fact, it's one of the sectors that has gone through a lot of issues in the year 2016. Again, we saw the closure of all of 3 banks. As we had said earlier, most of them surrounding on the corporate governance issues. And again, if you look at now all what happened when that one happened, again, it started now the liquidity in the money market was skewed towards bigger banks. And we've seen small banks struggling. We see again entry of multinational banks again that are targeting the Kenyan market, which again we are likely to see, as always been highlighting the site on banking sector report. This one is issues that are likely to continue in the future in the banking sector. Going forward in 2016 is going to be a difficult year for banks, because it's now the year that we are going now to have a full implementation of the interest rate cap bill that will result into reduced margins for banks. The real impact we are going to see in quarter 4 of this year. And if you've seen again the report from Central Bank is indicating that the earnings for banks recorded an earnings drop of about 10% in the month of November alone, year on year. This one just gives an indicator of where we are headed in terms of the performance for banks. And the first 6 months for banking sector is going to be difficult for them, given that now the banking sector still relies on interest income. 72% of revenues generated by net interest income, and 28% generated by non-funded income. This confirms that now the first quarter of 2017 is not going to be business as usual for banks in terms of profitability and revenue growth.
Much, Maurice Odwar, Saiton investment manager, for talking to us about business in 2016 and your predictions for 2017. We look forward to seeing you in 2017, Maurice. Thank you so much. And he does actually mention that with the 10% drop in performance for the banking sector, 2017 looks like it's going to be a difficult year for the banking sector. But let's now get back to our festivity stories. And as hundreds of thousands rush out of the city, some informally employed Kenyans say there's nothing to celebrate with tough economic times. KTN's Ashley Mazuri is out and about town, and her first stop is a shopping mall where she is now joining us to speak to us about what Christmas is like financially. Ashley.
Christmas season is known to be the time where retailers make most of their sales. We visited Sasa Mall in Nairobi's Moi Avenue. And of course, we're going to be talking to some retailers who are going to be telling us how 2016 has been, how their sales have been. With me is Leah from Grammar Boutique. Good afternoon, Leah.
Good afternoon to you, madam.
So tell me, 2016 imekuwaje in terms of this Christmas season peke yake?
Our business is very slow. We're actually trying to force our customers in because it's like KCP actually affected our sales.
Why is that? How does KCP affect your sales?
Because many parents are not shopping. Actually, they are passing by our shops, window shopping, saying that they are just shopping for back to school. Yeah.
Okay. Let's take a look at 2016 in general. If you compare 2015 and 2016, sales zake zimekuwaje?
Our sales are actually, they have gone down drastically because 2015, our sales were very high. 2016, we are actually suspecting it's because of elections. They have really affected our sales because now we are selling our clothes at very low prices. Yeah.
Neza uliza, where do you get your clothes from?
We shop from Turkey. We shop from Dairad and sometimes from Kampala, Uganda. Yeah.
So I'm guessing all through shopping through Thailand, you have exporting fee. Of course, you have to pay taxes. With low sales, how do you maintain your business?
We actually trying to lower our prices so that we can sell as many pieces as possible, but we are making very little profit. Yeah, to make our ends meet. Yeah.
Let's talk about competition. Hapa sasa at Sasa Mall, kuna stores nyingi zenye zinauza most likely the same things you guys use. How do you guys cope?
Especially at our Grammar Boutique, we go for quality. Our clothes are normally very unique. We normally buy very few pieces because customers don't like Kenya uniform, yeah? Yeah, so that's how we are trying to keep our customers in that way. Okay. Yes.
Lately, kumekuwa na trend ya kuwa people buy or advertise their outfits online. One, do you have a store online or do you have a page or an Instagram account where you advertise your shops? And then two, have you tried, how is it coping with now competition online, considering some people don't even have stores, they just do all their businesses online?
Yeah, we have an online page, Grammar Boutique Kenya. It has really boosted us. We have customers, we have many likes, but sometimes it is becoming, it's very challenging because there are those people who don't own shops. So they cut their prices, actually half price of what we are selling because they are not paying rent. So it's a bit challenging. And then most of them, they put online clothes which they don't have on stock. They download photos from the internet. What they advertise, they don't have in the shop. So when customers visit our stores, they always complain you are putting online something which you don't stock in your shops. So it is really affecting us because they actually not, they are blaming us, yeah, the way we are advertising. Okay. Yes.
Do you have any other challenges that you face on a day-to-day basis?
The other challenge we are facing, it's actually only on the pricing area, because you can get the same product. The same dress. We have Isri Garissa Road. This dress, you find it in Isri at 800 shillings. But here in town, we sell it, it goes for 2.5. But now, if you are very keen, yeah, the same dress, you'll find it in from Turkey. Turkey shops, they have the same dress. But now, Isri, we have imitation. So we are trying to explain to our customers, because I think everything we have here You walk to Isri, you'll find it there. But quality, it's a very low quality. So we have to talk much to our customers, explain to them, and convince them. So there's a lot of challenge in our clothing business. Yeah.
One last question.
Yes.
As retailers, of course, apart from the internet and social media, do you have any other means of advertising your outfits?
Not really, but through our customers, because it all depends on how you handle your customers. You know, I think our customer service matter a lot, because this is the 5th year we've been here, and the very first customers we sold, they still come back. They introduce us to their friends. So that is how we are keeping on. Yeah.
And most people during Christmas have promotions. Do you guys also have promotions?
No.
Why is that?
I don't know. Now promotions, you know, like many malls, they advertise. So I think it's just lack of maybe coordination. Yeah. Nobody has talked about that. Nobody has introduced that to us. Yeah.
Thank you very much.
You're most welcome.
Joy, if you've heard, business has been low this time round. Of course, they're blaming this to the early release of the KCPE results. Of course, we're going to be following up on this story, and we're going to get back to you later.
Thanks a lot, Ashley Mazuri, right there, speaking to one of the business ladies in Nairobi's Central Business District on how business is going around this time. And the release of the KCPE results early also means that school is going to be beginning early. So planning and budgeting is something that is key around this time. Now, a historic factory in Ukraine has been handcrafting Christmas decorations and giving excursions to children to support the long-lasting traditions of glass blowing and painting. This year is no different, only that now they're inspiring the younger generation to join the manufacturing industry.
In the village of Kladievo-Tarasove, some 50 kilometers from Ukraine's capital of Kiev, glass blowers and artists are busy handcrafting thousands of Christmas baubles ahead of the holidays. Established in 1949 as a glass manufacturing plant, Kladievo-Tarasove factory was converted to make Christmas tree decorations in 1953. It is one of few handmade toy manufacturers in Ukraine and one of the biggest Christmas ornament manufacturers in Eastern Europe, with cheap mass-produced items largely dominating the Christmas tree decoration market. The survival of this Soviet-era factory is proof handmade decorations are still defending their place in holiday markets. Factory manager Seher Kapenko says the holidays are a year-long affair at the factory, with preparations for the new season usually starting as early as February. Despite the fast development of modern technologies and mechanization of production, the art of glass blowing has not changed much since the middle of the 19th century, and the factory keeps its creative traditions. Before the fragile ornaments can be hung on Christmas trees, they go through the hands of several artists. Using a torch burning at 700 degrees Celsius, a glassmith heats up a glass tube to viscous state and blows out the bauble into the desired shape. Once the perfect form is achieved, the decoration gets a reflective silver finish. Then the fine brushes. An artist layers on gentle strokes of paint to create a pattern or drawing. Trix Ingado, KTN News, Nairobi.
And well, thanks a lot, Trix, for that one. Interesting that they are encouraging the younger generation to get into the manufacturing industry. And well, let's wind up by taking a look at our Twitter poll question, where we asked you how your last-minute Christmas shopping and travel is going. And we encouraged you as well to tell us about it. And we're just going to take a look at a few of your tweets here. Oliver Ochieng is saying last-minute shopping is a nightmare. Next year, I might do it 1 week earlier. And we're having Moses Walakira, who is saying all shopping centers are crowded with no usual bargaining. Everyone seems to have the money, so people are shopping with joy. And Momanyi is saying business can only succeed if only you invest in it. And those are some of the views coming through. Oliver Wabwide is saying, like being able to experience the glitzy shopping malls from the inside is always something to look forward to. And let's see. I think there's one more here I can go through. Yes, we're having one coming in from Christine, who is saying, shopping during Christmas is such a joy, but dealing with the traffic inside the malls is just a total interruption. And well, there we go. Some of your views coming through our Twitter handle. Keep the conversation going online. Coming up next is Worldview with Sophia Wanuna. And well, later on there will be the news in Swahili. My name is Joy Doreen Bira. For more business, log on to our website, ktnnews.com, and we'll be able to keep you up to date with the latest stories.